Good morning, one and all. Welcome to this fresh edition of Commodities Weekly Podcast with me, your host and guide, Ravindra Rao from Kotak Securities Commodity Research Desk. In this podcast, we will be talking more on the price levels rather than on macros because on the macros front, it is just the US debt ceiling that is taking all the headlines, as well as the Chinese concerns about Chinese slower pace of economic recovery and the uncertainty regarding Fed rate outlook. These are the headlines that are currently impacting the markets, and on the basis of this, we are seeing volatility in the financial markets and especially in commodities. So we'll be talking more on the price levels because all the commodities, like the major commodities, are either trading at supports or at resistances. So we need to understand what the price action is indicating. So that's why I thought that today let's talk more on the price front. A dollar last week jumped and it breached the 104 level. It hit a high of 104.20, which is a 2-month high, as the core PCE price index, Fed's preferred inflation, rose 0.4% in April compared to the previous month, higher than expected, which was around 0.3%. It climbed 4.4% year on year. So this has supported the dollar, and dollar inched higher. If we look at the price action, dollar index has reached a falling trend line resistance near 104.40, 104.50, and on the last day of the week, it has formed a doji candle, and if the price of DXY stays below 104.40, which is the doji candle high, then there is a possibility of some corrective move. Reasons being, one, a doji formation, and second, the trend line resistance. And on the lower side, the support is near 103.84, 103.64 zone, which is the doji candle low as well as a swing support. So if it sustains below 103.64, then we might see some more correction, and the next support is pegged near 60-day DMA support of 102.66. So there is a possibility it might fall towards that level. But otherwise, we feel 103.84, 103.64 would act as support. So the ideal trading range would be 104.40 on the higher side, and on the lower side 103.64. And if it sustains above 104.40, then we might see the resumption of the up move, which started a few days back, and it might move towards the next resistance of 105.10, followed by 105.70, which is the 200-day moving average. So we expect that the prices might take resistance near 104.40 because of the doji formation, but if it goes above that, then there is a possibility it might move higher. If you look at the US 10-year Treasury yields, even that is approaching the resistance near 3.90%. It has been trading in a falling channel, and with two reaction highs now, it is again moving toward a third reaction high. So there is a possibility it might take a pause close to 3.90%. Currently it is at 3.81%, and if that happens, if it takes a pause near 3.90%, then there is a possibility it might correct, and the support from here on is 3.63%, which is a breakout zone, which is an earlier breakout zone, and also it coincides with the 200-day moving average support. So our take is 3.90% would be the upper cap, and on the lower side 3.63% would be the support. If it sustains about 3.90%, taking a slight buffer, say 4%, then we might see a breakout. Otherwise, some corrective move is possible from 3.90% levels. Now coming to precious metals, even gold slipped last week, and in our last podcast, in the price in the technical levels, we had mentioned that if it sustains below $1974, then it might move towards 1937, which is the next support, and it registered a low close to 1937, which was close to 1936 an ounce. It was a 1.7% fall and a third weekly loss, again, mainly because of the higher treasury yields and the stronger dollar. Even silver extended losses and closed near 3% lower, in line with sharp decline in both gold and industrial metals. So even gold is taking cues from the U.S. debt ceiling talks, um, as well as the uncertainty on the Fed's interest rate stance in the June meeting. So we might get some clarity this week as we have the U.S. labor report, as well as we are inching closer to the deal, the US debt ceiling deal, and that will give some clarity on the price moves. But if you look at the price action is indicating towards um, yeah, price moment is indicating towards a bounce back, because if you look at the chart, if you look at the weekly chart, there was an inverse HNS formation in gold, a big inverse HNS formation, and we have witnessed a throwback from almost a third top near 2000 to $2085. The identical top resistance is near $2090, and from there we have seen a throwback, and now the throwback has come to the neckline support, which was the earlier resistance, which is close to $1934, and if it doesn't move below 1934, then there is a possibility we might see a turnaround, and the prices might once again move close to 1974, which has now become the support turned resistance. And if it moves above 1974, then we can conclude that a temporary bottom is in place close to 1934, or else we might see a consolidative move between 1934 to 1974. Having said that, 1934 would be a good support. If it breaches that and if it closes below that, then we might see gold further moving lower towards $1920. So gold is trading close to a good support, whereas dollar index is trading close to a good resistance. So we need to see how this week pans out, and that might give a direction for further couple of weeks. So just watch out for the level on the lower side $1934, and on the higher side $1974 would act as a resistance. Similarly, if we talk about silver, silver has corrected after forming a double top, identical top at $16, $26. And if you look at the Fibo retracement, the correction has completed almost 61.8%. That is, it is between 50% and 61.8%. But the interesting part is a bullish engulfing formation in the previous week on Friday, and that is indicating a possible reversal. If you look at the RSI is also showing a positive divergence. But we have to wait for the confirmation, and the confirmation will come only if it closes above the pattern high, that is the bullish engulfing pattern high about $23.33. And if that happens, if it closes about 23.33 on a daily closing basis, then the bulls might initially target the 60 DMA resistance of $23.86, and above that we can say that temporary bottom is in place. However, on the flip side, if the pattern low near 23 point um, pattern low is close to 22.67. So if it closes below 22.67, then we might this bullish engulfing pattern might negate, and the bears might target the 200 DMA support near $22.03. So it all depends on where the prices close. If it closes above the pattern high of 23.33, we might see a reversal in prices. Whereas if it closes below 22.67, which is the pattern low, we might see continuation of the bearish move in silver prices. Well, coming to energies, crude has been a bit strong, and we have seen prices sustaining at lower levels, and prices have jumped close to $75 last week. Now this was mainly on back of warning by Saudi Energy Minister to short sellers, and a bullish inventory report that boosted the prices to 3-week highs and helped close the week with 1.8% gains. Though a further upside has been capped as Russian Deputy Prime Minister Alexander Novak dismissed bets of further OPEC production cuts at its next meeting. On the price front, we expect crude prices to trade in a range because 60-day DMA resistance is near $74.86, which was the level last week crude had taken a pause. Now that would act as a good support, and on the lower side, the swing support is near $71, but a strong support is near 69.50. So until and unless it takes out 74.86 on a closing basis, we might see a slight consolidation. But the overall pattern is still on the sideways, and the consolidation might end only if 74.86 or $75 is taken out on a closing basis. Coming to base metals, even base metals slipped last week. Copper slipped to 6-month low, while zinc plunged to lowest in nearly 3 years, hit by sharp increase in stocks at LME warehouses in Singapore. Aluminium was, I would say, it was a bit steady, as it has not yet breached the support near 204. It closed near 207.85. But we have seen a good recovery from lower levels in copper as well as in zinc. Zinc, after hitting a low of close to 204, it has closed at 211.45. There is an interesting Morningstar formation in zinc on MCX zinc, and the confirmation will come only if it closes above the pattern high of 213.25, and if that happens, we might conclude that a temporary bottom is in place close to 204.15. If it goes below that, then the pattern might negate. On the upside, there is a falling window resistance near 214.35. That might be the target if the Morningstar confirms, and if it sustains above that, the prices might even further move higher and move close to 220 to 23. So a good formation is seen in zinc, but we need to wait for the confirmation, which will come only on a close about 213.25. In case of copper, there is an inside bar formation on our daily charts, and it has been confirmed with a bullish candle on Friday. However, there is a 200-day moving average resistance close to 716.50. So the bulls will have to penetrate the 200-day moving average resistance near 716.50 if they have to take it further higher towards 728. So that would act as a hurdle, but the inside bar pattern is indicating a near-term bottom close to 692. And as I mentioned, if it closes above 716.50, we might see a resumption of the retracement rally, which might extend till 728. Well, this week we have a couple of important events. One is the US debt ceiling talks, and if we reach out on a deal, then there is a possibility we might see there is a possibility of some corrective move in dollar index, and we might see some kind of a rebound in commodities. Now, this is mainly because it has been already discounted, and once the deal has been reached, we might see some kind of a profit taking in asset classes which have been higher because of this event. The next important event would be the US labor report, which is expected to show some weakness. And this might lead to repricing of interest rate expectations and weigh on dollar. So even on the price action front, we are seeing some kind of a profit taking in dollar and treasury yields, and some bounce back in commodity prices. So we might see some reversal in commodity prices this week. Keep a close watch on the levels that I have mentioned, and also on the events, especially the US labor report at the end of the week. Until then, there is a possibility the markets might be volatile, and however, we might see some kind of a respect of the levels that I mentioned. Well, that's all in this podcast. Best of luck and trade safe.